Well, hello and welcome to today's Voyant Ireland data input webinar using AdviserGo. My name is Rosie Hutchinson. I'm part of the Voyant UK training and support team. I'm going to be presenting the webinar this afternoon. So what we're going to do today, though, is build a client from scratch because we're going to focus on inputting data. And so here's my list of clients that are already in the software, but I'm going to come down to the bottom right hand side of the screen and click the plus button. Today I'm going to be entering data manually, but we do have various import options available. So if you'd like to know more about the import options from various back office systems, I'll explain as we go along as well how to contact the support desk to ask for more information. So let's click Create Client, and the first thing we're going to do is just put in the very basic details for this client. So their name, their date of birth, their gender, are they male or female, whether or not they're already retired, and the age that they're intending to work to. So for now, I'm going to leave retirement, say, at 65 for Liam, although one of his questions is, can he afford to retire early? And click Done. Once we've clicked Done, we're into the software proper. And the first screen that you see is the dashboard. And I think of this as the hub of the software. As we add data, you will see a cash flow chart building across the screen in front of your eyes. And once we've added data, it's also the place where we can see at a glance what we've got into the plan. Before we add any data, I just want to check that my plan is set up to use the assumptions that I want to use for my long-term financial plan. And to do that, come to the bottom of the screen and click Plan Settings and check your inflation rates, your growth rates, etc. And these are the Voyant defaults that are built into the software. But of course, you can adjust these to whatever you consider to be reasonable, credible, and defendable. So I'm happy with inflation at 2.5%. Savings growth rate, which is going to apply to cash in the bank in my plan, I'm going to adjust this down to 0.5%. My gross investment growth rate, I'm going to adjust to 5%. I'm happy with property growing at 2.5% per annum. I'm going to adjust income to match that. And the same thing for my measures of inflation. So I'm going to have everything set at 2.5%. The same thing for my default tax table assumptions. This is assuming the rate of escalation that applies to tax allowances, etc. So I'm going to set that to 2.5%. And you may notice that all of these field names are underlined with dots. And if you hover over the dots and a question mark appears, if you click on the question mark, you will see inline help popping open, and it will explain a little bit more about what this particular field does in the software. So we've got that there, and I'm going to close down inline help. In a moment, I'll show you how to turn on inline help in case you don't already have it turned on. So these are the long-term assumptions that I want to make in my plan about inflation and growth. Let's look at fees and taxation. I'm going to remove the fees for savings. So we're not going to pay any fees on our cash that's in savings accounts. For my invested assets, I'm going to adjust the fees up to 1% per annum. And these will be deducted from my gross growth rate. So if I adjusted my growth rate to 5% per annum, by the time I've deducted my charges of 1%, that will give me a net return of 4% per annum on my invested assets. And again, inline help is your friend here. If you click, it will explain what sorts of accounts fall under different headings in the software. So you can see where these different rates will be applied. So let's close down inline help again. Liquidation order, I'll just briefly touch on this. This affects the order in which invested assets are spent. And so we'll spend our taxable investments, then our tax deferred. So usually pensions is last. Calculation settings, I'm going to leave everything set at the default, which is no. So I've set up the assumptions I want to use in the plan. I'll just turn on inline help, or show you how I turned on inline help. If I come up to the top right-hand corner of the screen and click on the profile symbol here and come into my preferences setting, make sure that inline help is turned on, and I've got my dashboard chart turned on, and you'll see the chart begin to build on the dashboard screen as I enter data. Okay, so now let's start adding some of the other things that need to go into this plan. And again, we click the plus button and choose what it is that we want to add. And we're going to add some more people. We need to state whether they're in a formal legal partnership or a non-legal partnership. That will be particularly important for IHT planning. And we've got Liam's wife, who's called Sheena, and her date of birth. She's female. I'm going to leave her as not already retired and a retirement age of 65, and I'll click done. And note that each person in the plan gets their own coloured icon, and we can see those appearing on the screen now. They're going to denote the ownership of accounts in the plan and also the ownership of events, and we'll come on to events in a minute when we look at the timeline. But we've got a child to add here as well. So this is a child and this is Callum. So Callum's date of birth, 2005. And just notice as well that there's an additional details screen here. And if clients are receiving child benefit that they'll receive up until age 18, for example, we can factor that in. So let's click done. And now that we've got that child benefit coming into the plan, we'll see some bars appearing on the chart in the cash flow. And we'll come back to what the bars mean in a moment. Now we're going to add various savings, investments, expenses, etc. into the plan. But before we do that, I want to take you to the timeline. So at top left, the next tab across is the timeline. And I think of this as setting the structure for the plan. So it gives me a framework within which to work. And you can see that the software has already built some items onto the timeline for you. We've got the start event. The plan starts, incidentally, at the date we're adding the data. So that's today's date. You can adjust that later on if you want to by clicking on the plan name at top right, which is the base plan, and then choosing to manage plans, and you can adjust your start date. So the plan's starting today, and every planning year will run for 12 months from today's date, so 16th of November through to the 15th of November 2022. The only events that we've got on the timeline so far are the points in time when these clients are due to retire at age 65, and mortality, and the default for the software here is 90. Now you can adjust that to whatever age you want by clicking on the event, the tombstone, and you could pull it out to 100 if you wanted to, just by moving the slider, or by adjusting the year or the age in the boxes. But we're going to leave it at 90 for this client. And that will be the end of the plan when the two main clients in the plan pass away. So if we want to add events into the timeline, which are going to mark points in time in the plan when things happen, we can do that. So I'm going to click the plus button. And Sheena in this plan happens to know that she's getting an inheritance next year. So I'm going to add an event to mark the point in time when that's happening. So we'll give the event a name. We'll make sure that we change the owner to Sheena. And if there's an appropriate little icon, we'll choose a particular icon, and the inheritance one, that little money bag, is quite appropriate here. When's it happening? She doesn't think she'll actually get the money until some point in year 2 in the plan. So we're going to move that into the future a little bit. So that's the point in time at which it's happening. We'll add a value when we're back on the dashboard. Let's add that in. What other events are we going to think about? We'll be doing long-term financial planning for these clients, and we've talked to them, done some fact finding about what their financial objectives are. And they've outlined what they think they might need to spend. And particularly when we think about later life planning, often in early retirement, people want to do lots of nice, exciting things. Then as they get older, they slow down a little bit. Maybe the health issues creep in. They don't spend quite so much. So we're going to add an event to our timeline to represent a point in time at which we can adjust our spending. So click the plus button again, add an event, and I'm just going to call this slow down. And I'm going to put it in quite a way into the future when Liam is 75. And again, at the moment, that's just marking a point in time when something may happen. So we've got those events in there. The other thing that I want to use the timeline for is to personalize the plan for these clients. And so I'm going to actually adjust the names of the life planning stages, which are visual cues to the client as to what's happening when. And Voyant gives them rather sort of bland names, pre-retirement and retirement. To rename a stage, click on it, and then you can call it whatever you want. And this is going to be their working years. Some people call it accumulation or saving, whatever you want to. And it's starting now all the way through to when Liam retires. Click done. Then they've got that period between their ages 65 and 75 when they're hoping they'll be able to enjoy having more time to themselves. So we're going to add in a new stage. So click to add a stage. And I'm going to call this Living the Dream. They're planning to go on lots of holidays. I'm going to choose a nice positive contrasting colour. And I need to set up when this starts and ends. Drag the start event into the box and then drag the end event into the box and click done to save it. So we've now got that stage in there, and I'm going to rename the final stage and I'm going to call this Later Life and click done. So now that I've set up my timeline, I'm going to go and start adding some information back on the dashboard screen. We've already got that little bit of income, which is the child benefit in there, but we're going to start adding more things, and let's add their income first. And what sort of income is it? Well, first of all, we've got Liam's employment income. So we'll just call this Liam's job. The source, is he employed, self-employed, or a company owner? Company owner gives me scope to input dividend income. I'm going to leave it as employed, but it affects how we'll tax the income, and it's always gross income that you put in here. So he's earning 150,000 per annum. No bonuses or benefits in kind that I'm told about. The growth rate has pulled through from our plan settings, but I can adjust it for this individual item here if I want to. I'm going to leave it at 2.5%. Whenever you add anything into Voyant, you need to think about who owns it, give it a name, maybe a source or a type, give it a monetary amount, check your growth rate, and then think about the timing. Over what period is it happening, if it's some sort of regular income or regular contribution. And for employment income, the software is going to assume they're working now and they'll stop working at retirement. If it was going to vary at any point along the way, I could add in a step. So if he was going to go part-time, maybe when he got to 60. So let's click to add that into the plan. And we'll start to see the bars draw out over the period for which he's working. Now you can see that we've now got a black line on the chart, and the black line is a total expenses line, but we haven't added any expenditure, but that's the software calculating your tax and your social security payments already built into the plan for you. So what other sorts of income have we got? Well, Sheena's got some rental income. I'm going to add that when I add the property. But the other thing that we know about is that she's getting that inheritance. And inheritances come in as a sort of income but they're a one-off lump sum income, so they go under the heading of windfall. So change the owner, give it a name, Sheena's Inheritance, give it a type, and give it an amount, 100,000 euros. So that's the value. When is it going to happen? If you click timing, we can see that mini timeline, and we can use the event that we created earlier to set the timing for this windfall, and click done. Now watch the chart, and we should now see a spike in year 2 because we've got that additional income coming in. And to see it even more clearly, click details. And if you click on the 3 grey dots on the right hand side, put the key on. And you can now see what the different colours mean. And inheritance comes under the heading of other income. And so it's in there in that pinky purple colour. And there's also the child allowance that's in there in the early years while Liam's still young. But again, that's very small in contrast to the other items in the plan. So that's their income. And now let's start adding some assets. Let's click the plus button and we'll put the property, the non-liquid assets in first. And first of all, we've got their jointly owned home. So we'll just call it home. You need to think about the type. Again, the drop-down arrow will show you the types, and inline help would explain the relevance. Again, it's related to tax, really. So this is their primary residence, and it's jointly owned, and it's worth 800,000 euros. Don't need to worry about a purchase value for a main residence. We own it already. It's not a future purchase. Let's look at the timing. The software assumes that we're going to live in this property throughout the lifetime of the plan. Of course, if we were planning to move at some point, we could put in an event and use it as the sell event for the property. There's a mortgage on this property, so I can add in a linked debt by clicking linked debts and creating a debt. So we'll call it home mortgage. It is a mortgage, and there's 120,000 outstanding on this mortgage with an interest rate of 2%. It's a repayment basis, and if I put in the number of years remaining, the software will calculate an expense, a monthly expense, and factor that into the cash flow for me. So I'm going to click done to save that, and done to add both the property and the mortgage into the plan. And so that expense will end once we've repaid the loan. And if you have a look on the right hand side beneath the chart, we've got a widget, and I've got it showing assets versus debts at the moment. So it's showing my asset value that I've entered so far, the debt, and my net worth. So that's the first property in the plan. Now let's add the second one. And this one just belongs to Sheena. And so this is a rental property in her name. So we'll change the asset type. We'll put in the value, the purchase price. She owns it already. No mortgage on this one, but there is an income linked to it. So again, I'm going to create an income, and I'll call it rental income. She's getting 15,600 a year as rental income. And the reason that I link a debt or an income to a property is that if I sell that property, we'll stop the rental income that's linked to it. And if there's a mortgage on it, we'll repay the mortgage with the proceeds of the sale before we release any of the equity. So let's click done, and done to save that. Okay, so we factored the rental property into the plan, and we can now see that we've got more other income, and that's the rental income happening all the way through the lifetime of the plan. So let's add some liquid assets for them now. Click the plus button, and this time it's savings, and that's going to go in as savings. It's a jointly owned savings account, and I'm going to call this their emergency fund. It's money set aside for a rainy day. and there's 30,000 in that account. Again, the fees and interest have pulled through from my plan settings. Actually, for this account, they're probably only getting 0.1% per annum. So let's adjust that down for this particular item. They're not making regular contributions. So if they're not making regular contributions, I don't need to worry about setting timing. What I do want to think about for this is it's an emergency fund. They will only spend it in a dire emergency. So I don't want the software to have the ability to dip into this as and when it needs to. So I'm going to set what we call a withdrawal limit. And instead of the default, which is as needed, I'm going to set it to do not allow, but I've got choices of scheduled only or keeping a minimum balance in there at all times, or withdrawing up to a specific amount each year. But I'm going to set do not allow. And click done. So that won't impact on my cash flow because that money has been ring-fenced. But if I want to have a look at it, I can switch my widget view from my assets versus debts to assets by type. And I can see now what have I added in terms of assets. So far, I've added a couple of properties and the savings account. And as we add other investment types, then we'll start to see what the widget looks like. But actually, before we add any more investments, I'm going to talk about expenses. We've already seen that we're factoring in tax, social security payments, and the mortgage repayments. But what about what these clients want to spend personally? And let's add in some goals and some expenses. What's the difference between a goal and an expense? Well, goals are relatively new functionality in Voyant, but I think of goals as significant or long-term financial objectives that the clients really want to make sure whether they're on track to achieve them. If we identify that they're not on track, then what do we need to do to achieve them? So I'm going to add their sort of long-term goals as goals, and we're going to put in. Now, we have the choice of pre-retirement or retirement goal, but we can actually adjust the timing. So I'm going to start off with a pre-retirement goal, and I'm going to rename it, again, personalizing it. And I'm going to call this Maintain Lifestyle. And they've told us that they want to have 40,000 a year to cover their basic expenditure. So things like food, utilities, travel, in terms of, daily travel, petrol, etc. So it's going to be a basic priority. It's a top priority. We're factoring in inflation. And the timing, I want to allow for this to happen throughout their lifetime. So I'm going to set it to end at final mortality, at the plan end. And I'm going to click done. So that's a long-term expense item. Oops. And let me just check to see whether that did pull through. I'm just going to click refresh because it hadn't quite done what I was expecting to see on the screen. Sometimes you just need to refresh the screen. So this is a long-term expense. And what the chart is telling me now is there are blue bars and red bars. The red is where there's a potential shortfall. And not unexpectedly, that's happening in retirement. Whilst they're working, they've got plenty of earnings coming into the plan. In retirement, they haven't got income that will cover that off. So we're seeing some shortfall because in retirement, remember, if I put the colours back on, so far we've only got the other income in the plan, and that inheritance that we got right back at the start, the software just holds it in cash until I tell it where to invest it, and so that's that cash that's being spent there. Let's put the key back on there for a moment. We're going to add another long-term goal. Again, I'm going to put it in as a pre-retirement goal, but I'm going to run it throughout their lifetime. And this is their more discretionary spending. So we're going to call this holidays and fun. And they've told us that at the moment they're spending $10,000 a year on family holidays. It's not so much of a priority. So I'm going to move it down the priority sort of list in terms of it's more of a discretionary spend. If they can't afford to do everything, this is the area that they'll cut back on. And the timing is going to happen from the start all the way through, but we're going to vary this expense item through time. So we're going to use steps and add a step, because they think once they retire and they're into that living the dream stage, they're going to double their spend in today's terms for that first few years of retirement. So starting when they retire. However, they appreciate that as they get older and they slow down a bit, they probably won't want to carry on spending at that rate. So later on in life, they're going to drop their spending on holidays, etc., down to €5,000. And again, that's why we'd set that event in there. So let's click Done to save the steps, Done to save that goal, and watch the chart redraw. And again, there's more red now in retirement, and you can see that reduction in spending at 75. What else have they got as a financial goal? Callum, they're hoping will go off to university. So we've got a specific type of goal called education goal just for that purpose. And we're going to change the owner to Callum, although the parents will pay for it. And we'll call it Callum Uni Costs. And they're going to allow €6,000 a year to help him out with accommodation costs. When is that going to happen? If you click timing, by choosing Callum as the owner of the goal, it assumes that he'll probably go off to uni when he's 18, graduate after sort of a 3 or 4 year course, and we can create those events automatically for us. And so we'll say yes, and the expense will only happen over this period here. So click Done. One more type of goal to add, and I can see where I'm running away with time, so we're going to speed up a little bit. We'll add one milestone goal, which is a one-off, and it's going to be 50th birthday celebrations. And they're going to allow for a big party here. We'll put €30,000 in, but it's a luxury. When's it going to happen? I forgot to add this onto my timeline, so I can add an event here. Just double click in the right year, choose an appropriate icon, and set it as the event at which that expense happens. So that's the goals in there. Still lots of red, and I'm going to add one expense. An expense we don't track as visually, and this is going to be a multi-year expense for replacing their car. €20,000. It's a bit of a luxury, really. And I'm going to set the timing. They want it to start a few years down the line, so we'll have the little car event and carry on all the way through. I'll set that as the start event and carry on all the way through to 75. But they're not going to buy a new car every year, so we're going to adjust the expense frequency and set that to 5. And that should then add that expense in once every 5 years over the period we've selected. So you'll see those little sort of blips coming into the plan in the years where we're replacing the car. Still lots of red, but let's just complete the picture now by adding the rest of their assets. We'll add in some investments, and Liam has an investment, a CGT type investment of 100,000. No contributions. I'm happy with my growth. Oops. And I've put the value in the name box. Liam's portfolio account. And we've got 100,000 in there and a base cost of 96,000. There we go. Let's add that in. And I'm adding that in there. It's a liquid asset. I didn't set withdrawal limits, so it's available to spend, and that's what's being spent here. We'll add another investment, this time jointly owned, so set the owners, choose the type, and this is their exit tax unit linked investment. And they've got 160,000 in there. Again, put in some sort of base cost. It's an existing investment and it was purchased in 2020. Click done. And each time I add an investment, you should see the assets by type widget is reflecting that. And we're pushing the red out as we make more liquid assets available in the plan. A couple more things to add. Pensions. Different types of pensions. Let's put in a defined contribution for Liam first. Liam's pension. He's got 190,000 in there already. He's making contributions as a percentage of his income. So as his salary goes up, so will his contributions. His employer is also making contributions. So again, we'll put in the relevant details. The growth, again, will pull through. And the timing, the software assumes this happens whilst he's working. So from the start to the end. And click done. And so that will be an expense to him, his pension contributions, although he'll probably qualify for tax relief. And watch the chart. You can see that when he gets to 65, we've crystallized and taken the tax-free lump sum. And then we've got our minimum required distributions in the orange color coming out of that pension as well. Let's add another sort of pension quickly, which is a DB scheme. And this is Sheena's. And it relates to a previous employment. So it's not active, she's not accruing benefits. And at the moment, it's a deferred scheme. And we're told that she's entitled to 6,000 when she retires. So I'm not going to escalate it in deferment, but in payment, it's going to escalate in line with CPI. And there's a 50% widows in there. The normal retirement age for the scheme is 60. I don't know anything about the lump sum. Survivorship applies, so if she dies in deferment, Liam would get the widow's pension. But the timing, I need to set an event at which to bring this into payment. It's not going to happen when she's 65, she can take it from 60. So again, just add an event in there and set it as the start event. And you should see some dark green coming into the screen, the chart, to denote that. So all the while, as I'm adding data, I'm watching what's going on the screen to see the different sources of income. The key at the top is telling me what all the colours mean in there. Just a couple more things to add in terms of pensions. Their state pension entitlement. And the software calculates when they'd be due to get it and what the maximum amount would be. Now, they haven't earned their maximum entitlement yet, so I'm going to reduce that down to 6,000 a year and click done, because the software will escalate that between now and then. And you should see the dark blue coming in here. And again, if I do exactly the same for Sheena, and I'm just going to adjust that down. One final thing to add in terms of the data for this plan, and that's some protection. So different forms of protection, we're going to add in some term assurance. It is jointly owned. We'll call it a mortgage protection policy. It's not an employee benefit provided as part of his employment package. It's a personal policy, so he'll be paying the premiums. It's a decreasing lump sum, has another 10 years cover to run, linked to the mortgage. Current benefit or sum assured is 120,000, decreasing by 5% per annum, and there's an annual premium of €300. It's jointly owned and it's first death, and it's not written in trust. Check the timing. It's in force from the start of the plan. So click done. So there we are. We've added all of the data into the plan. We've watched the cash flow chart build. We've watched the assets by type widget fill in the picture, or we can look at the assets versus debts. I've had the cash flow chart on here, but we could instead look at assets, expenses, debts. The mortgage is disappearing out of the plan as it's repaid, net worth, plan worth, and also what tax are they paying and when. And you can see the sort of exit tax, etc. along the way. But I find it most useful to stay on the cash flow chart. And if I want to sense check my data, I can either expand each section underneath the chart and look at my goals. We're on track to meet all of our goals, and then expand the different sections to look at the values that I've got in. If I need more detail, click Year View, and then use the slider underneath the chart to focus on the year that you want to check. And you can check, where's my money coming in from in terms of cash flow in this particular year? What am I spending it on? And you'll see the software is calculating the tax and the social insurance, pension contributions, and all of the expenses that we modeled in there. I can look at the end of year balances on my investment accounts, the pensions, and you can see the pension contributions. Again, click into the pension to see even more detail. And we can see who's contributing what. The employer's contributing and Liam's contributing. The property and any debts outstanding against it, the debt and the mortgage payments that we're making, the protection, and finally there's an in-year tax computation for each year in the plan. So I've run slightly over time, but hopefully you found that useful. We've seen how we add people, assets, expenses or goals into the plan, how we construct and personalize the timeline using stages and events. And now that we've built our plan, the timeline includes our tracking of our goals. It lists all of our expenses, or all of our events rather, and when they're going to happen, who they belong to, the age and the year in which they're happening. And again, if we hover over a goal, we can see over what period that particular goal, that financial objective, is being met. So we're looking at the dashboard, we're looking at the timeline, and last but not least, we can come and look at the charts. So a full page view of the chart, either the cash flow or any of the other charts that we can access using the drop-down menu, or if you're on a touch screen, swipe left or right. And finally, we can put on a dual chart view so that we can compare, for example, our cash flow with our assets, or with our taxes, or our debts, whatever we wanted to compare. I think I've done enough talking for today. Hopefully, if there were questions along the way, Liz managed to pick those up. We've recorded this webinar, and as I said at the beginning, the recording should come out to you automatically by the end of play tomorrow. If you have any questions about anything you've seen today, or any questions when you're working on a plan for a client, click the client name and click Request Support. And when you do that, You can type us a message. It will have your phone number pre-populated in there, but just check to see it's correct. Type us a message and click Share Client Access. And that gives the support team the ability to open up your plan, look at it. If it's a straightforward question, we'll probably send you an email response with some examples or some notes to refer to. If it's a bit more complicated, we can contact you to set up a screen share and work on the plan together with you. So thank you for your time today, and I'm going to just see if I can check to see any of the questions, whether they're still visible in there. Okay, I can't see any questions that I need to respond to now. So thank you for your time, and watch out for the other webinars that are coming up in this series of webinars. You should have had a note of those in the latest newsletter, because I think we've got some more dates coming up over the next couple of weeks. So I'm going to shut the webinar down and finish the recording, and hope to speak to you again soon. Okay, goodbye for now.